What's good, bag chasers, and welcome back to the Bag Breakdown. It's your hosts, and today, man, we are diving deep into the pockets of an absolute titan, Bank of America. They just dropped their latest earnings report for the fourth quarter and full year 2025, and trust me, the numbers are talking. So we gotta listen. We're gonna break down what it all means for the bag. Let's get it. So here's the billion-dollar question, right? The one we're here to answer. After we dig through every single line of this report, are we looking at a serious glow-up for Bank of America? Is this a stock we're trying to add to the portfolio, or is it a hard pass, a total flop? By the end of this breakdown, you are going to have the final verdict. Let's go.
All right, first things first. Before we get into the nitty-gritty, we got to look at the highlight reel. These are the headline receipts, the big, shiny numbers that BofA slaps right on the front page of their report. This is the story they want you, the investor, to see. But you know how we do. We start with their story, and then we go find the real story.
Okay, so check this out. I'm putting their main highlight slide up on the screen right now. And look, on the surface, it is a sea of green. They're hitting you with earnings growth, revenue growth, balance sheet strength. I mean, every arrow is pointing up. It's the picture-perfect report card. But we don't just look at the cover of the book around here. Let's break down what these numbers actually are. First up, the big one. Full-year net income, $30.5 billion. That's billion with a B. And get this, it's up 13% from last year. Now just let that sink in. In this economy, with all the talk about inflation and uncertainty, for a bank this size to grow its profits by 13%, that's not just getting by, that's straight up thriving. That's a major green flag right out of the gate. Next up, look at this right here. Earnings per share, or EPS, is up a massive 19%. Now here's why that's a pro-level insight. The EPS growth at 19% is growing faster than the overall profit, which was 13%. So what does that tell you? It's a huge signal that they're using their cash to buy back their own stock. That reduces the number of shares out there, which makes your slice of the pie bigger and more valuable. It's a direct move to put money back into shareholders' pockets. That is exactly the type of move you want to see. And finally, the top-line number. Full-year revenue clocking in at $113.1 billion. That's up a super solid 7% from the year before. So the story they're telling us with these headlines is crystal clear. They're making more money, they're keeping more of that money as pure profit, and that profit is flowing back to the investors. On the surface, this is an A-plus report. But we don't stay on the surface. Time to go deeper. All right, that was the appetizer. Now it's time for the main course. See, a bank this huge isn't just one business. Nah, it's like a collection of 4 different companies all running under one roof. And Bank of America has 4 main pockets where it stacks its cash. To really know what's up, we have to open each one and see what's inside. We're going deep on consumer banking, wealth management, global banking, and global markets. Let's find out where the real bag is hiding. First up, consumer banking. This is the Bank of America you and I see every day. Checking accounts, credit cards, car loans, mortgages, the whole shebang. In the fourth quarter, they pulled in $11.2 billion in revenue and cleared $3.3 billion in pure profit. Solid. But I want you to look at that second line, provision for credit losses. It's sitting at over $1 billion. So in simple terms, that's the bank putting money aside because they expect some people might not be able to pay back their loans or credit cards. It's a little warning light that they see some stress on the horizon for the average person. It's our first red flag, so let's keep that in the back of our minds. But hold on, because this is where it gets super interesting. Hidden inside this giant consumer banking segment is a side pocket that is absolutely on fire. While everyone's focused on credit card debt, regular, everyday people are quietly stacking up a serious amount of investment assets with the bank. This is huge because it shows customers aren't just using BofA for their paycheck deposits, they're trusting them with their whole wealth-building journey. And this chart right here shows you exactly what I'm talking about. Just look at this growth. Consumer investment assets shot up from about $518 billion to almost $600 billion in 1 year. That is a 16% glow up, people. Pause the video if you need to let that sink in. And this isn't just the stock market going up. The report shows that $19 billion of that was brand new money from clients flowing in. People aren't just banking with BofA, they are investing with BofA. That is a massive, massive vote of confidence from their customers. And the foundation is still getting stronger. They've added net new checking accounts for 28 quarters in a row. Let me say that again, 28 straight quarters. That is 7 years of consistently growing their core customer base. So yeah, while there might be some concerns about a few people missing payments, the customer base as a whole is getting bigger and, as we just saw, richer. That's a powerful combination.
Let's see if this trend continues in their next business.
Okay, next pocket. Global Wealth and Investment Management, or GWIM. This is the velvet rope section of the bank. This is where they serve the high net worth and the ultra high net worth clients. We're talking Merrill Lynch and the private bank. And this division, it's a straight up cash cow. Look at that, $1.4 billion in net income on $6.6 billion in revenue for the quarter. Now check out the provision for credit losses line. It's negative $3 million. That means they think their wealthy clients are actually less of a risk now than they were before. That's the complete opposite of what we just saw on the consumer side. Now, brace yourself for a number that is just mind-blowing. The total amount of money this division manages for its clients is $4.8 trillion. Trillion with a T. That's up 12% in just 1 year. I mean, the scale is just hard to even wrap your head around. When you're managing a pot of money that's bigger than the entire economy of most countries, even tiny little fees generate billions in stable, predictable revenue. This division right here is one of the crown jewels of the entire bank, for sure. And they're not just sitting on old money either. They are actively hunting and bringing in new, wealthy clients. That's the real growth engine for this whole operation.
Hold on, are there actual numbers on that? Like, how do we know for sure they're adding new people? Show us the receipts.
Bet. Receipts coming right up. The report spells it out right here. They added approximately 21,000 net new relationships across Merrill and the private bank just in 2025. That is the key. They are a magnet for new wealth, which means this $4.8 trillion machine, it's only going to get bigger. And they've got the hardware to back it all up. They are basically sweeping the award season for wealth management. #1 on the Forbes list, #1 on the Barron's list. I mean, they're flexing hard on the competition.
Okay, but who actually gives out these awards? Are they legit or just something they paid for?
That's a great question. Nah, these aren't some pay-to-play stickers you get in the mail. We're talking about Forbes and Barron's. These are two of the most respected names in financial journalism. They do insane amounts of research and vetting to create these rankings. So yeah, these are 100% legit. It's a major flex that tells the whole industry they're at the top of the game. Let's move on to the third pocket, global banking. So if consumer banking is business to consumer, this right here is business to business. This division is all about handling the money for massive corporations. We're talking the Fortune 500s of the world. And as you can see, it's another powerhouse, clearing $2.1 billion in profit for the quarter. This is the part of the bank that acts as the financial plumbing for the entire global economy. Now here's a number that tells a huge story. Average deposits in global banking are up 13% year over year, hitting $656 billion. So why does this matter? This means the biggest, smartest companies in the world are choosing to park more of their cash at Bank of America. In a shaky economy, cash is king, and where a company decides to store its cash is a massive vote of confidence. It says BofA is a safe harbor. They're winning the trust of big business. And this slide just puts their dominance into perspective. They have a banking relationship with 96% of the U.S. Fortune 1000. Just think about that. They are woven into the very fabric of corporate America. They also locked in the #3 spot globally for investment banking fees for the year.
Wait, break that down. What does investment banking fees actually mean?
Great question. So investment banking fees are the money a bank makes when it acts as an advisor on huge corporate deals. Think about when one company buys another, or when a company wants to go public and sell stock for the first time. The bank advises them and collects a massive fee. A #3 ranking means they're one of the top deal makers on all of Wall Street. It's a huge deal. Okay, on to our fourth and final pocket, and it's a beast. Global markets. This is the trading floor. This is the Wall Street you see in the movies. This is where the bank is buying and selling stocks, bonds, currencies, all of it, for their big clients and for themselves. This is usually the most volatile, unpredictable part of a bank, but as we're about to see, Bank of America has turned it into an absolute machine. So where does the money in this high-stakes division actually come from? This donut chart makes it super clear. Look at that. A massive 87% of the revenue comes from one single source, sales and trading. That's the core of the business right there. All the other stuff is just a side hustle. The main event is the action happening on those trading desks every single second of the day. And this right here might be the single most impressive stat in this entire earnings report. Let it sink in. 15 straight quarters of year-over-year growth in sales and trading revenue. That is almost 4 years of non-stop growth in what is supposed to be the most unpredictable, up-and-down business there is. They have built an absolute monster, a trading division that just prints money, good weather or bad. This incredible consistency is the rock-solid foundation of the bank's success right now. Okay, deep breath. We've officially broken down all 4 of BofA's pockets. We've seen the massive wins, and we've spotted the little hints of caution. Now it's time to put it all together. We are moving to the vibe check, where we stack up all the green flags against all the red flags to get a clear, balanced picture of this company's health. Let's do it. Let's run the board. The green flags are heavy hitters. The headline growth in income, EPS, and revenue is undeniable. That 15-quarter winning streak in sales and trading, that's elite. The sheer scale of the wealth management division with $4.8 trillion is like a fortress, and it's still growing. And that 13% deposit growth from big corporations shows deep trust. Now the red flags. That billion-dollar provision for credit losses on the consumer side is real. It's a warning. The report also shows they're closing physical branches, which tells you how they see the future of banking. And we noted investment banking fees were pretty flat, up only 1% for the year, which means the deal-making environment was tough. So the crucial question is, how do all these factors balance out? We've seen the receipts, we've done the vibe check, we've weighed the good against the bad. There's only one thing left to do. It is time for the final verdict. Is Bank of America a bag we secure, or is it one we drop? So it all comes down to this moment. After digging through the numbers, checking all the pockets, and weighing the flags, what is the final call? Are we, the bag chasers, going after this one? The verdict is in. For Bank of America, it's a definitive secure the bag. Now here's the logic. While those red flags on the consumer side are real and definitely something to keep an eye on, they are completely overshadowed by the raw power and consistency of the other divisions. That global markets trading floor has become an unstoppable all-weather profit engine. The global wealth management division is a behemoth with a deep moat, and it's still attracting the richest clients in the world. These 2 pillars are so strong and so reliable that they can easily carry the entire company through any bumps on the consumer road. The foundation is solid, the growth engines are firing on all cylinders, and the scale is just undeniable. And that is the breakdown on BofA. We dug in, we checked the receipts, and we made the call. It's a solid operation. The big question for me going forward is, can a titan this big keep dominating as the world of money changes? We'll have to wait and see. But now, I gotta hear from you. Which company's bag should they break down next? Drop the name in the comments below, and maybe we'll tackle it next. Until then, keep chasing.